Memphis has traditionally been a bifurcated market with clear weak spots, but also some clearly attractive areas. But lately, we've seen some discouraging signs, even from one of Memphis's key submarkets. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Memphis update. Traditionally, the Memphis apartment market has been a laggard nationally with subpar occupancy rates and rent growth levels. That traces to relatively weak economic drivers here. Now, let's take a quick look at the current fundamentals before we dive into the real storyline here, which we alluded to earlier. Apartment occupancy, as usual for the market overall, is weak, just 92.2% as of Q3. That is the worst rate among the nation's largest 50 markets, and by a wide margin. The next weakest markets are Indianapolis and Las Vegas, both of which measures a full 100 basis points above Memphis. But weak rates in Memphis are pretty typical. Over the last decade, occupancy in Memphis has averaged below 92%. And the rent growth story isn't much better. Same-store rents for new leases climbed up just 1.3% year over year. That's a step back from the previous 3 quarters when rent growth was hovering around 2.5% annually. And Memphis was one of just 7 markets nationally among the core 50 to post rent growth below 1.5%. The U.S. average, by comparison, was 3.7%. And all this traces to an economy in Memphis that just hasn't found much momentum. Job growth picked up a little bit in recent quarters, but it's still quite lackluster with an expansion rate around 1% annually. And Memphis is still far from recovering all the jobs it lost prior to the recession, about 30,000 of them, a hole of nearly 5%. Typically at this point in the discussion, we'd transition to a yes, but, and highlight some of the better performing areas in Memphis. But this time, we're actually going to highlight that among those areas that traditionally outperformed, we're starting to see one of those spots start to show some discouraging signs, and that is the key eastern suburbs of Germantown, Cordova, Collierville. But in those key suburbs, we've now sustained a pattern of underperformance. Occupancy, which had been hovering around 95%, has been below 94% for 4 straight quarters. And even more concerning than that, year-over-year rent growth levels have averaged just 1.2% since the start of 2013. And as of Q3 2014, rents were up only 0.1% annually, so basically nothing. Now, the challenge for these eastern suburbs is that there simply isn't enough demand. There is some new supply in the area, there's more on the way, and at the same time, the single-family home sector is also heating up. Now, other spots of the country facing a lot of supply, and even more supply than these eastern suburbs, that hasn't been a problem because the demand tailwinds have been so strong. But in Memphis, there just isn't enough job production or not enough of the key demographic of educated young adults to really boost and sustain strong apartment performance. Downtown Memphis, by comparison, continues to do very well. This is the other traditional outperformer for the Memphis Metro, and it right now continues to show strong occupancy rates and rent growth levels. We expect that to continue. We also expect to see weakness continue in some of the lower rent submarkets across the Memphis area. So the real question is, what happens in those eastern suburbs? We're going to be watching that one closely going forward. And that's going to wrap us up for Memphis. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.